Hey everyone, and welcome to Earnings Cheat Sheet for Friday, January 31st. It's Alexis Garcia and Ed Carson here, and we'll be going over some key upcoming earnings reports to help you prepare for the week ahead. Well, Ed, it's still January and we still have earnings rolling in. So what do you have for us today?
Yeah, three big ones still, Amazon, Google, and Palantir.
All right, well, let's start with Palantir, which is scheduled to report Q4 earnings on Monday, February 3rd. Earnings are expected to rise 37.5% to 11 cents per share, and revenue is seen climbing 28% to $776 million. And here's why we're watching Palantir. We'll be looking for any government revenue upside and management commentary on Doge, especially as it relates to any modernization efforts. And of course, we'll be looking for comments on any DeepSeek impact. So Ed, Palantir was the top performing stock in the S&P 500 last year. It got a nice post-election bump in November. But what are your thoughts with the data analytics firm heading into earnings?
Yeah, it's done very well. It's had several quarters, I think, of revenue growth acceleration. Its commercial growth was coming on while the defense and government work was slowing down, but they got a number of wins, like expanded approval, basically generally with the government and some various deals, suggesting that might take off again. I think there's a lot of hope that they might do well with Elon Musk and Doge, that they can do some more work there. So I think that's one, they've just been a really strong stock. Obviously, it's priced in a lot of gains. So you really need to see that growth continuing. It needs to show that growth. It needs to show strong outlooks. But this has been doing very well.
All right, well, let's take a look at the chart because Ed, Palantir broke below that 50-day line on January 10th, but rebounded really nicely, getting back above this 80 level. So it looks like maybe that 84.80 high is the next step. But what are you hoping will set up here before earnings on Monday?
Yeah, I mean, I would like it to pull back just a little bit, maybe on Friday and Monday, because it sort of has at the end of this week, it's due to have a base, sort of a V shape. It'll be 6 weeks. So that will be a base. If it could pull back, especially if it have almost a negative week, that would actually be positive in the sense, get a little bit of a shakeout, sort of have a handle there. It might be too short to really consider it a handle, but that would provide an early entry, sort of these recent highs within there. So it's setting up where a lot of the stocks we've been looking at in earnings season, it's like, they aren't necessarily that ideal, but this one could, set up. So this is one that's been saying, hey, we think AI is going to be commoditized. So they feel like they're positioned well for DeepSeek, at least they've said, but it'd be nice to see what they have to say. They're usually bold and brash in general. So I assume they'll come out confident, but it's this chart looks pretty appealing here, especially after such a long run, to really hold up pretty well.
Yeah, you can see this long run here on the weekly chart, this RS rating, perfect 99 score today. And you mentioned, Ed, the earnings growth looking really strong, decelerating here, but still very, very solid numbers here from Palantir.
Yeah, and so we might see some slowdown on the sales front. It'd be great if they did revenue growth accelerating again. And we'll just have to see if they can have like both the government and the commercial side really picking up. Comparisons are getting tougher, but this is strong performance. But they need to do that. This is after there's a lot of expectations in the stock. It's gone up a long way over the past year, past 2 years. So it has to do that, but so far it has.
All right, well, we'll be watching Palantir, and let's move on and take a look at Google, which is scheduled to report Q4 earnings on Tuesday, February 4th. Earnings are expected to rise 29% to 212 per share, and revenue is seen climbing 11% to $96.68 billion. And here's why we're watching Google, again, known as Alphabet. That's the parent company. We'll want to see 2025 CapEx plans, any comments about DeepSeek, how AI overviews are doing, and any info about OpenAI search competition and cloud outlook. So Ed, we've seen Google really have strong growth in its YouTube and cloud computing businesses. And of course, that web advertising is going to continue to hopefully grow and rebound. But what are you looking for here with Google earnings?
Yeah, people want to see that the business is going great and they've got a lot of great things going on with AI. And that is what they've been able to churn out, or at least could provide in recent quarters. Solid growth, on the earnings and revenue side. So yeah, you're looking for those kind of indications that the core business, which is really about ads on search and in YouTube, and that they can make AI become a real positive for them. Initially, there was concerns that AI would be a real threat to them, and that hit the stock at various times last year, but it has really come on. Microsoft's Bing, which was using some OpenAI tech, didn't really gain market share, even though people saw there, and Google seems to have bounced back from some initial flubs with their AI. So things are going well, and this is one that it's still delivering some solid growth, and it's not hasn't run up as much as some of the others. So definitely could be doing well here.
And let's take a look at the chart, Ed. We're on the weekly here, and we see it cleared this tight area here after a recent breakout of the cup with handle. Flirted briefly with this 10-week line, but is reversed higher and trading near those weekly highs this week. Again, looking at that 200 round number there. So, what are your thoughts with the technical action here with Google?
Yeah, I think you could sort of see that recent area, this whole past several weeks as a base, or essentially a base. And so if it'd be great if it paused a few days and pulled back, but if it could break out, clear that area on earnings, I think that would be a buying opportunity, certainly an add-on place. And having this tight pattern after a deeper base is just ideal. I mean, you'd love to have, it's pretty shallow here. And if you look at the prior base, I'm not sure how deep that was, but maybe, yeah, not
About
too bad.
23%.
Not too bad, but it's still always nice to see in a tighter action. So sometimes if you don't get that first chance, because you can see that it broke out, but by the time it broke out from that cup with handle, it was already sort of moving quite a bit from the 10-week line. Here it is sort of, so if you miss that chance, here's another one. And yeah, so I think that could be an opportunity if it can wait until earnings and then has a positive reaction.
And we see the volume here kind of drying up after that breakout. Is that any pause for concern, or what are you looking at other terms in terms of other technicals?
It moved strongly when it broke out, or when it broke out a few weeks ago, and then it's sort of paused. It's traded tightly. So it's just trying. I think it's been pretty constructive. I mean, if it breaks out, then you'd want to see the volume. It hasn't really done that. The RS line isn't quite at highs, but it's getting there. It's pretty close. So, it wouldn't be surprising to see that go if it can make another move here. So this is generally, doing quite well.
And anything in terms of fundamentals that you see here at again, we see really solid revenue and sales growth here for Google.
Yeah, I mean that's the best way to put it. It's solid growth. It's institutional quality. It's delivered a couple of really strong years. It's supposed to slow down some more next year, so there is that aspect. It's just hard to go year after year when you're that size, but it's been doing pretty well for a while.
All right, well, let's move on then to Amazon, which reports earnings on Thursday, February 6th. The e-commerce giant is expected to see Q4 earnings climb 48% to 148 per share, and analysts expect revenue to rise 10% to $187.35 billion. And here's why we're watching Amazon. The focus really remains on AWS and North American retail operating income. Analysts are looking for 19.4% growth for cloud revenue, which would be a slight acceleration from Q3. For retail, investors seem like they've been debating whether some increasing satellite costs could bite into margins, though it seems like Amazon calmed some nerves with their Q3 profits. So, Ed, what's on your radar with Amazon as earnings approach?
You have to remember that Amazon does have some lumpy earnings. That can have some big moves and then drops, and their guidance can be all over the place. So it can be a little tricky. I mean, you can expect some big things, and then it just doesn't come through. Then it fades off. But the trend has been pretty strong here. This is another one, really strong growth for 2024. So that's been impressive, and I think that people are looking at it. The Amazon Web Services, that's where the money maker. That's where they get so much of their profit, and Google Cloud will also be important in there. We'll have already had Google Cloud, and we already had Microsoft, and that came in a little light, a little light. So I think that's a concern. Now, if Amazon can beat those expectations, that would be really good, especially in the wake of Microsoft. And they seem to have done better again in retail operations. They seem to be doing just really well overall. And that's been turning out. Especially it's leveraged really strong earnings growth on solid but not spectacular revenue growth. So really strong earnings the past couple of years.
And let's take a closer look at the chart, Ed, because Amazon rallied past a 233 buy point. You can see here on the weekly chart, hit an all-time high and still in a buy zone the week ahead of earnings. So, what are your thoughts here with the technical action?
I mean, it's acting pretty well. There's some back and forth. I mean, and there's obviously been a lot going on with AI stocks and the market and earnings. So, sometimes the weekly just sort of calms it down. It found support at the 10-week line. Yeah, it's gone up and down, but it's trading right around, trading flat. When the NASDAQ is down, a lot of other names are down. So I think this is solid action here. It's finding support where you'd like it to, right around a buy point. The RS line is at a highs. So if this one could, move out on earnings, it would definitely seem like a buying opportunity, in that situation. So yeah, just a lot to like about the technicals, the fundamentals, lot, it's an institutional favorite. So definitely a lot to like about this name.
All right, Ed. Well, those were some of the big names on our radar, but of course, there's always more to take a look at. So why don't we start with AMD? We all hear about NVIDIA, but AMD, we're on the weekly chart here still. We can see has been in a downtrend for most of the last year here and trading solidly below the 40-week and 10-week lines. So uh, chart action's not looking great, but what could come up in earnings that could be of interest to investors?
I mean, AMD's got to find a way, since NVIDIA's not doing particularly well right now, if NVIDIA AMD's the also ran, it wasn't doing well even when NVIDIA was thriving for quite a bit of it. So it needs to find a way. Now, I don't know if they can, how can they stand out now in this environment, turn it around and become a real force in AI chips? And they're just not doing particularly well, even though their profits are coming up.
All right. How about another chip name with ARM? This one looks like it broke out last week from this kind of lopsided cup with handle base, but it has since uh, moved back below that buy point edge. So, what are your thoughts here with ARM?
This one's just very volatile. I mean, it's just that makes it really difficult. It makes some big moves, but it also sells off quite a bit. So it's just hard to watch it. So it's concerned there. It's still, it's still possible they could set up again. It'd be nice if it could be tighter. It just feels like there's other names in the AI space that aren't quite as volatile.
All right, well, let's take a look at one more chip name. That's Qualcomm. Qualcomm here again, we're on the weekly. It looks like it cleared out of a tight area here a few weeks ago, retaking that 10-week line. And now looks like that 40-week line is the next key resistance level for Qualcomm to get above.
Yeah, it's possible that if it can get above that, you could, on earnings, that you could use that as some kind of entry. It's trying to turn around. The earnings are okay. It's just it hasn't been seen as a real AI play. Now, it has everybody's doing AI or something, or they're involved in something. So I'm sure they are, but they need, they haven't really captured that AI theme for investors. So it would be nice to see if they could, show like that growth is going to pick up and that they're going to get more involved in that space because it's definitely been a laggard, like a lot of non-H AI chip makers.
All right, let's take a look at Spotify, Ed. They also report next week. This chart looking a lot different, looking much better. Broke out here of this cup base with a 506.47 buy point. Looks extended from that buy zone, Ed. So, what are you hoping to see set up with this chart as earnings approach?
I don't think there's really a chance to be buying this one. It's doing great. It's definitely one of the leaders. It's gone a long way. So if people have bought it, recently, they do have to make a decision about do they have enough cushion. So recent buyers, it's sort of maybe on the edge. We'll see. For longer term investors, it's an easy hold, in that situation. But definitely acting well. But I don't see a new buy point anytime soon.
Yeah, nice to see these earnings here really accelerating with Spotify. Let's hop over to Uber, Ed. This one broke out back here the week ending October 11th in 2024. In a sense, kind of rolled over, broke below the 10-week and 40-week lines, and now looks like it's made a move above the 10-week, but 40-week, the next stop here.
Needs to get above that. The problem for Uber is that it's really not about Uber. It's about Waymo and Tesla. It broke out when it seemed like the robotaxi day was a dud for Tesla. Now, obviously, things have turned around for that. But now there's concerns, and there's concerns that it'll get shut out, that whether it's Tesla or whether it's Waymo or something. So it's not clear what it can do. If it moves higher, it just feels like another announcement from Musk, or if Waymo says we're going to another city, that could knock it down again. So that just provides a headline risk. There's nothing you can do as an investor to to get away from.
All right, well, let's take a look at Five-Serve Ed also reporting earnings. This one building the right side of that cut base with a 223.23 buy point, but getting above that 10-week line here this week, Ed. So possible early entry here ahead of earnings, or what are your thoughts?
I do own a position in this actually, and I have it around off that early entry. I'll have a decision to make because it's not much of a cushion, but a lot of payment stocks are doing well. So this is doing well. There's a lot of others that are doing well. This one has solid earnings performance. You can look at that 2022, 16%, 16%, 17% for this 2024, 2025 back to 16. So this is the earning stability is a two, and with one being the most stable out of 99. So it's just been a real strong performer over time. It sold off a couple months ago, but that's because its boss was its CEO was became the Social Security administrator, so that was a risk. Now, obviously, that's important. Person was running the company and all that, so that's just something there. But a lot of payment stocks are doing right now.
Right, let's take a look at Fortinet, Ed. What are your thoughts here with this chart?
Right around a buy point, essentially. You can treat that whole area as sort of a flat basis. Past couple of months came off the 10-week line. Growth is going to slow a lot in 2025. That's the concern there. But there are a number of cybersecurity stocks that are doing well right now. The RS line is right around a high. So people will be interested in this, not just for Fortinet, but what it means for other companies in that space.
All right, let's take a look at Blue Owl Capital, Ed. We've seen finance names doing really well. This one broke out last week powerfully, but now it looks like it's dipped back into that buy zone. So, what are your thoughts here with the chart?
Yeah, maybe you could pause here, and it could be something where you take a position. Obviously, it made a really big couples 2-week move. I think they're involved some of the financing of data centers as well. I'm not sure, but this is definitely one that has some strong earnings performance. Revenue growth has picked up for several quarters. So there's definitely this is a group. There's a number of names in here that are doing well.
All right, let's switch gears and take a look at Chipotle, Ed. And what are your thoughts with this chart? It looks like trying to get above that 40-week line here after this pullback. So, what are your thoughts?
I think you'd like it to get above the 10-week line as well. I mean, that's just generally because that'd be another resistance level right there. So if we could do that, then maybe. The question is the RS line has come down quite a bit for a while now, and there's a lot of other restaurants that are doing better. Now, maybe Chipotle can turn it around. I'm not saying it can't, it can do another run, but there are a number of others that are doing better. So you have to ask, do I want, a laggard in that group, hoping that it turns around? Because there's definitely have been stronger performers in the past year.
All right, Ed. Well, thank you so much for your insight today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune into Stock Market Today with Alyssa Korm. That goes live after the closing bell. And we'll see you all here next week.